Hello there. Welcome back to Financial Accounting at 6. In this video, we want to look at the question on the preparation of statement of comprehensive income. And we are given a question that we have here, which is our question 3. And it reads that the following information relates to Peter and John Cross Corporation. And then we're given a trial balance at 28 February 2017, whereby you are given a list of balances that you need to go through before you answer the question. Going down, you'll see that we've got a continuation of the question. Then beneath that, we're given additional information, which you also have to go through before you start to answer the question. And then on the required part, it reads to draw up the statement of comprehensive income of Peter and John Cross Corporation for the year ended 28 February 2017. Then show calculations in brackets, which is the instruction that we are given, which is very important. We have to show instructions, you have to show your calculations in brackets so that you gain more marks. So our question has got 30 marks. So going to our answer section, if you go to our answer section, you'll see that we are given, we have got our statement of comprehensive income for the ended 20 February 2017. And obviously, we are going to start with our sales. So we are going to say sales in the beginning of the our statement of comprehensive income. We are going to say sales. Then we are going to look for the figure for sales. Obviously, we go to the list of balances in the trial balance to try to see what figure do we have for sales. Come here, you check your figure for sales. Going down the list of balances, you see that we are not given anything in terms of sales in the list of balances. If you have such a situation, you have to go to additional information, find out any hint that we can have in terms of calculating that sales figure and calculate it. So we go there item by item, that is point by point, to try to see if we can find the figure for sales. If you go down, you'll see that if you go to your last point, which is this one, it reads sales including VAT at 14% amounts to 855,000, 855,855 rands. So this is what we have. So what we're going to do is we're given an amount of VAT inclusive. They're saying including VAT. So the figure that we want is VAT exclusive. Remember, if you say VAT exclusive, and then you add your VAT exclusive, and then you add your VAT, you get your VAT inclusive. So this is what we have. So in this case, we are saying our VAT exclusive is always 100%. And then depending on the question, your VAT in this case is 14%. And then the VAT inclusive becomes 114%. And then having this now, you are supposed to make a proportion. Remember, you're given 855,855. So what you are supposed to do there? Just make a proportion by saying your VAT inclusive is the figure that we are given here. So you're saying 114 is equal to 855,855. So the figure that we are looking for is VAT exclusive, which is this one, which is 100%. So this is a question mark. So just say 100, which is what we don't have as a numerator. What we have is 114 as a denominator, calculated by the given figure, 855,855. So this is the figure that we have. Then we calculate it as such. You are going to see that the figure that we are going to get there is equal to 750. 750. So this is exactly the figure that we are going to show in the statement of comprehensive income. So going there now to the statement of comprehensive income, we are just going to summarize our working that led us to the final answer. So we are saying we said 100 in brackets. We said 100 over 100 114. Then we multiply by 855. 855. So this is exactly the calculation that we did. And the figure that we got there is 750,750. Exactly like that. So what we're going to do now is we are now moving on to this next section, which is on our cost of sales. So we just say less cost of sales. So for cost of sales now, we try to find out again any figure that we are given in terms of cost of sales. Go again to the list of balances, that is our trial balance. We start there, we start for looking for the figure for cost of sales. We go down, you'd see that we are not finding it in the list of balances. We go to exchange information, find any hints about calculation of cost of sales. We see that again, we are not seeing any figure that is telling us about cost of sales there. So we try to find out any figure that can lead us to our cost of sales. So we go up again. So it means that we might also find that figure is a missing figure. So we try to find the figure for gross profit that can lead us to find the figure for cost of sales. So going up there, you see that let's try to see if we have got any information that we that can lead us to the calculation for cost of sales. So if you come here, you would see that we are given the figure for trading account, which is our gross profits at a figure of 442,500 here. So exactly this figure is the one that we are going to lead us to the calculation of cost of sales. So it means we can leave a cost of sales blank and then we go to gross profit. Remember when we say our sales minus cost of sales, get our gross profit. So here we are supposed to have our gross profit. And the figure that we have that we are given there is 442,500. Then now we can find the figure for cost of sales. Remember, we are saying to find our gross profit, we are supposed to say gross profit. If you say our sales minus our cost of sales, you get your gross profit. So in this case, our sales we got it as 750, 750, 750. 750, 750, and then we multiply our cost of sales. So I will subtract our cost of sales, and then our gross profit will be the figure that we got there. Let's just recheck it. It is 442,500. So here we are saying 442,500. So we can find the figure for cost of sales by making the sum of the formula. So if you make it the sum of the formula, there going to be cost of sales is equals to 750 minus 442,500. Then we calculate it as such, we're going to get a figure for gross profit, which is 308,250. So having this figure now, we can now go and put it as our cost of sales. So basically, we are saying this is our cost of sales. And we just summarize the final working that led us to the answer, which is this one. Then we can put it in brackets now. So we are saying our cost of sales, the figure that we got is 308. 380,250, and we put it in brackets so that we are subtracting. And here, for our cost of sales, try to put it the working in brackets whereby we are saying 750, 750, and then we subtracted our 442,500. So this is what we have. So having done that now, what we are supposed to do next is to go to the other income section. So we are here. We are saying other income, whereby we're just going to list all the incomes that we have and beneath that. And then the total obviously will come in line with other income. So let's just try to go back and try to identify other incomes that we are having. So we are going to go down looking for other incomes that we are having in the question. We go down checking here. If you come here, we have got a loan to John. If you come here, we have got a loan to John. So if we give one of the members a loan, it means as a business we are going to receive uh, interest. So this is a loan too. But if it's a loan from, it's going to be an expense to us. The interest will be an expense to us. But if we are giving a loan to a member, it means we are going to receive a loan. So it's going to be interest received. So it's going to be our income. So we have got 10% here of total amount of 49,500. But then this loan was granted on 1 June 2016. Remember, our year is ending on 20 February 2017. So it means the loan is not for the full year. We are going to count the number of months that we have there. So firstly, we are going to say 10%, which is our 10% as a decimal is 0.10. And then we multiply by the total amount that we are given, 49,500. Then we count the number of months from 1 June to end of year 28 February 2017. 1 June 2016, 28 February 2017. So we're saying the whole of June, July, August, September, October, November, December, January, February. So we have 1, 2, 3, 4, 5, 6, 7, 8, 9. So we've got 9 months there. So it means here, the answer that we are going to get by saying 10% of 9,500, we multiply by 9 over 12. Since we have 12 months in a year, and we do that, see that we are going to get 3,712.5. And if it round it off to to the nearest whole number, it becomes 3 here, and we've got 3,713. So this is the figure that we're going to put as our interest are received. So we are going to or we can just say interest on loan to John, and then we just put our amount there. So we are coming here, and we have our interest on loan. Interest on loan to John. So this is what we have. So the figure that we got there was 3,700 3,718. So here we are saying 3,718. So we can just go there and try to find out about any other income that we are given in the question. So as we are going down, we are also going to check for other incomes that we can have in the question. So we are going down again, checking if we have got any other income that we have. So if you go down, we see that there's nothing that we are seeing. We go down, we have got, let's try to see. We have got dividends received here, which is also an income. Dividends received on investments, which is 9,000. But then we cannot put it as it is, so we can check if we've got any prepayments or accruals in terms of that dividends. I remember dividends received is an income, so we check for income of income accrued or prepayment in the additional information. But if you come to additional information number 3 here, dividends on investment include an amount of 1,500 for March 2017. March 2017 is out of our financial year. Remember, our financial year is ending 28 February 2017. So March it will be out of. So it means it was received in advance. It's a prepayment of an income. So we have to subtract it. 1,500, we have to subtract it from the figure for dividends that we are given there, which is our 9,000 to get the actual amount for the period. So we come here, we say dividends received. So here we are saying dividends received. And in brackets, just show summarize the working web. You're saying 9,000 minus 1,500. And then the 500. Right. Then We also check for provision for bad debts. We are seeing there's provision for bad debts here in the second point. And we know that provision for bad debts can be an income, can be an expense. So we need to check it before we leave other income section in the event that it becomes under other income. Because if it's a decrease in provision for bad debts, it becomes an income and we have to put it under other income. But if it's an increase, we'll show it as an expense. So we're given that is 5%, but before that, we're told that bad debt to the amount of 540 must be written off. So we have to subtract this 540 first from the figure for the data that we are given, and then the net figure multiplied by 5% to get the level of provision for bad debts for this year, and then compare it with the one that we are given the trial balance, which is represented for the previous year, and to show we see if there's an increase or a decrease. So we check the figure for data that we are given in the list of balances. You see that we are given the figure here as our sundry data. And then the figure that we have is 93,540. 93,540. 93,540. Then 93,540 is the figure that we have for the level of data for the period. Then we subtract the one for the one that was written off. Bad debts to the amount of 540 must still be written off, which is 540. So we come in, which is 540. And then we do that, we get the figure for the level of data for the period. We get the figure for data for the period. So what we are going to do now, if you subtract there, we get 93,000. And then after getting 93,000, now we can now calculate the level of percentage of data for the period. Remember, we're given it as 5%. So we are going there, we are going to say the data for the period times 5%, and 5% is 0.05 times 93,000. And then we say 0.05, and then we multiply by 93,000. And then we get our 4,650. So this is the level for the period. And then we compare it with the one that we are given in the list of balances. The one that we are given in the list of balances are for provision. For bad debts is 4,350. So this one represents for the previous year. So it means it moved from 4,350 to 4,650 for the current year. So this is what we have. So we check there and you see that it's increasing. That's an increase. So if it's an increase, it becomes an expense. So it means this one is representing an expense, and it gets to fall under the expenses section. So it's not going to qualify under other income. So we just leave it. We'll calculate it when we get there. But if you calculate it, I will say 4,650 minus 4,350. We are going to get an increase of 300. So this is what we have. Then having an increase of 300, we are going to put it under expenses section. So we can leave it for now, and we can adjust it when we leave the expenses section. So it means these are the only incomes that we have. So we are going to add the two, whereby we are going to say 3,718, 3,718, 3,718 plus 7,500, which we are going to get 11,000. 11,230. So this is what we have in terms of other income. total for other income. So we go there and try to see in terms of now the gross income. Remember, if you say gross profit plus your other income, you're going to get your gross income. So here you're saying gross income. So gross income, we say gross profit plus other income. Then we say 442,500 plus 11,280. And the figure that you're going to get there is 453,714. Then after that now, after gross income, we're going to say less expenses. Then under the expenses section now, that's where we have got that provision that we calculated. So you can just say provision for bad debts. Then you just show the final calculation that led you to the answer. Remember, we calculated it there, and the final calculation to get the increase of 300, we said 4,650. 4,650 minus 4,350. So that's the calculation that we are just going to summarize there. So here we are saying 4,650 minus 4,350. And then we get your 300, which is supposed to come in this column. And then after that, we can now go to the list of balances that we have in the trial balance and try to find out any other expense that we can identify there. So we go up there, we try to go down. We go down, checking for other expenses. We've got repairs and maintenance. We go to let's try to see. So after that, we need to look for other expenses that are given in the question. So if you go down, I would see that we have got our repairs and maintenance here, which is our 21,000. So but before you enter that amount, you need to check if there are any prepayments or accruals that are there in the question. That is repairs and maintenance owing or repairs and maintenance paid in advance. So we can always find about that information in the additional information. So if you go through each and every additional information, you are going to see that you don't have anything to do with repairs and maintenance. So in such a scenario, you have to take the figure that are given in the list of balances is 21,000, and then this is going to be your repairs and maintenance. So you come in, we are going to say repairs. You're going to say your repairs and maintenance. Repairs and maintenance, and the figure that we have is 21,000. So you're going to just say 21,000. And then we go to next expense that you are having in the list of balances. So given our repayment and maintenance, we've got 21,000. Then after that, we also have to go to additional information to find if we have got any other expense that we are given in the after repairs and maintenance. So if you come on the list of balances, we are given that after repairs and maintenance, we've got interest on long-term loan, which we are given as our 13,500. So we are not going to consider this. This just represents you the interest that was paid. We need the interest for the period. So if you go down, we also check for other expenses. So for interest also, we can just go there and try to see in terms of our loan. That's where we can be able to find the actual figure for the period. So for loan, if you come here, you'd see that we've got interest on loan from a member, which is this one, which is at 12%. So we are going to say 12% loan from P. Peter obtained 1 January 2016. So we have got 30,000. And it was obtained on 1 January 2016. So it means, remember, our year is starting 1 March 2016. So it was already after. So it means we are going to charge interest for the whole year. Oh, the whole 12 months, the loan was already there. So we are going to say 12% of 10,000. So I will just calculate it maybe year and say 12% is 12 over 100 times the total amount that we are given there, which is, let's just try to see loan from Peter is 30,000. So times 30,000. So here we come, we say 30,000. So we calculate it like this. We try to see what do we get there. 12% times 30,000. We are going to get 3,600. So 3,600. So 3,600 represents the interest on loan, which is for the whole year. So we are going to indicate it again there as our one of our expenses. So we are saying interest on loan from Peter. And the figure that we have 3,600. So as simple as that. Then we go to the next one. Right. We go to from interest, we are going to salaries and wages. Remember, we are going to have our our other expense that we have there, which is salaries and wages. So for salaries and wages, what we are going to do is we are going to say 140,400, and then we check for any prepayments or accruals in the additional information about salaries and wages. If you come in, you'd see that for salaries and wages, right, we go to item point number 1, 2, 3, 4 here. Salaries and wages, including the salaries and wages account, is a profit distribution of 15,000 to each member. So this profit distribution is not supposed to be there. This is 15,000, and you know that members that are there, we have got 2 members. Go at the beginning of the question. We are told that there's Peter and John. So we have got 2 members. So we are going to calculate the total contribution for the 2 members, whereby we are saying 15,000 times 2, and you are going to get your 30,000. So we are going to remove 30,000 from the total for salaries and wages, which is total for salaries and wages is here, which is 140,400. So I will just make the calculation there. So here we are saying salaries and wages, and then in brackets to show the working whereby we are saying 140,400 minus 30,000. And then the answer that you get is 110,400. So this is the figure that we have for salaries and wages. Then we go back again to the list of balances to check what we have. Administrative expenses, we have got 17,400. Then administrative expenses also, we have to check if we have got any other adjustments in terms of prepayments or accruals or any other adjustment that might affect administrative expenses. We go down to exchange information, that's where you can find those adjustments. So you see that we don't have anything to do with our administrative expenses. So we take the figure that we are given there and put it there, which is our 17,400 as a representation of our administrative expenses. So we come in. So you see administrative. And the figure that we have for administrative expenses, 17,400. And then we go there again after administrative expense to see what other expense we have. We've got insurance here, which is 18,000. So we check again additional information if you've got anything to do with the insurance in terms of adjustments. You see that we've got nothing. So we check the figure that we are having there for insurance, which is 18,000. Then we check again after insurance, another expense that we are given there. After insurance, we've got remuneration for accounting officer, which is 19,050. So we can check that one. We don't have any adjustment to do with that, so we can check as it is, which is remuneration. Remuneration accounting officer. The figure that we have there is 90,050. And then after that, we go to dividends received on investment. We did adjust for that under the income. Then we've got provisional tax paid 52,500. We are not going to include it as a tax payment. Remember, this is just a provisional. We are going to adjust for tax after net profit. So we can leave that one. Then we go to, so it seems we have finished our expenses, but we also have depreciation. Remember, depreciation won't be stated in our trial balance. So let's just check for the expense for depreciation. So we can always get the instruction of calculating depreciation in the additional information. So if you come here, second point would provide the following. Depreciation on furniture, it's 20% per annum. So we're on cost. So this is the straight line method or the cost method, whereby we're going to say 20% of the cost of furniture. So you come in, you see that the cost for furniture we are given it here, which is 120,000. 120,000 is the cost for furniture, and then we have the percentage that we are given is 20%. So I'm going to say 20%. 20% of 120,000. So you say 20%, 20 over 100, or times 120,000. So we calculate it as such. We calculate it as such, you're going to get your 24,000 here. So our 24,000 is going to represent our depreciation. Depreciation, since we only have one non-current asset that is there, we're going to say depreciation. And we're saying it's 24,000. So this is what we have. Let me check if we've got still another expense that we can. So if we come to point number one, we also have bad debts at the amount of 540 must still be written off. So we still have bad debt that we need to include as an expense. Remember, bad debt is an expense. So we come here and put our bad debts 540. So this marks the end of our expenses. Then we can add all the expenses that we have, starting from our bottom 540, going up, adding everything up to 300 here. So the total that you're supposed to get to represent your expenses total, which is supposed to come here, is 227,790. And we are saying less expense, so we're subtracting. So now what you are supposed to do is to say the gross income. Let's just try to see. Remember, we've got a gross income there just on top. So we're saying gross income minus less expenses. So 453,740 minus 227,790 to get your figure for your gross profit. Sorry, to get your figure for the net profit before tax. So if you say 453 227,714, and then we subtract 227,790. You get 225,924. 200, let's just try to see if we added correctly there, just above on here. When we added here, we are supposed to put 13 there. Because there 3 plus 0 is going to give us 3. So here you've got 3. 3 there, then and then we subtract now 453,714, 713, and then we subtract 227,790. And then I'm going to get your 225,923. So we are going to put that one as our net profit. So our answer is going to come there as our 225,923, and it's going to be our net profit before tax. Net profit that we have there. So here the net profit that we are getting is net profit before it's before interest, not tax, because I remember we also have interest that we need to charge, and then here now that's where the interest expense is going to come. So for the interest expense, we are going to our question section, and we are given a long-term loan that we have here, which has got 90,000 and the interest of 15%. So to calculate the interest, we are going to say 15%, which is 0.15 as a decimal times 90,000. And then we get the interest for the period, 0.15 times 90. You're going to get 13,500. So our interest is 13,500, which we are supposed to subtract there as our interest expense. Right. So we have 13,500, whereby we said 0.15 times 90,000. And then we are subtracting it. So after that, now that's when we're going to get profit. Profit before tax. So we say 225, 923 minus 18,500. You're going to get your 212,000. 423. And then after that, now that's when you are going to have your income. That's when you are going to have your income tax expense. But if you go to additional information, we have got, remember, you would have gone through the additional information, so you'll be knowing each and every component of your additional information. But if you come to this point, is saying provide the following, you're given South African normal tax 108,300. So this is going to be your tax for the period. This one that we have there. So you're going to say tax is 108,300. We are going to say 108,300. So this is the tax that we have. Then you subtract it from there to get the net profit after tax. So the figure that you're going to get there is going to be net profit. It's going to be net profit after tax. So you're saying minus 108,300. Then you are going to get your 104,123. 104,123. And this is going to be your net profit after tax. So this is your final figure that we have in terms of our statement of comprehensive income. So this is what we have, guys, according to this video. Let's stay tuned for more videos to come in Simple Exam. As for this video, I'm signing out to meet again in the next video.